Hello, good evening. Coming up tonight on Business Live, Bank of Ghana assures businesses not to panic, insisting it has required dollars to deal with recent pressure on CD. We shall be interrogating whether the assurance is enough to control the rate of depreciation. Also in this bulletin, we shall be assessing the Societe Generale's financial and operations following reports of possible exit from Ghana and some African countries. Meanwhile, banking consultant Dr.Atuahene warns a takeover of the bank by another entity could lead to a restructuring that may affect some staff.
You cannot have two managing directors. You cannot have two executive directors. All these people would have to be downsized. And that is where the right sizing and downsizing comes in. And that will have implication on the labor force.
Plus, Director of Delex Finance, Ken Thompson, attributes the exit of some multinational companies to government's lack of interest to prioritize the private sector.
The government of Ghana is not interested in private sector. The government of Ghana is not interested in creating jobs. I mean, when it has money to create jobs, it funds some youth schemes that don't deliver any value.
Details of these and many others lined up for you. Please stay. Thanks so much for your company. I am Pius Kojo Baka. This evening, the Bank of Ghana is assuring businesses not to panic, insisting it has the required dollars to deal with the recent pressure on the Ghana cedi. My colleague George Yafe tells us more.
The assurance from the Bank of Ghana follows report that there is some element of speculation that is fueling the current pressure on the Ghana cedi. This is because some businesses are worried that the current situation could worsen going forward. Therefore, it might be prudent to move quickly to secure the dollars now for their future needs. The local currency over the past 2 weeks has witnessed what some may describe as sustained depreciation against the US dollar. This, the commercial bank says, fueled by a strong pickup in demand coming from businesses. Some of the banks have accused the Bank of Ghana of not supplying the market with the required dollars. But the Bank of Ghana maintains that it needs to be strategic with its dollar intervention. This is despite the fact that it has the required dollars to defend the local currency. Some commercial banks are now selling the dollar at 14 Ghana cedis. This was after it has been in the 13 Ghana cedis range for a long while. But for some market watchers, the Bank of Ghana might be in a difficult position. That is, what should be the right level of dollar intervention, having in mind that too much could deplete their reserves. Again, not moving fast to support the Ghana cedi, and what could be the impact of these developments on inflation going forward, and how that could erode the gains that we recorded over the past 6 months.
Let's have a discussion on this. Joining us via Zoom to do that is research lead at GCB Capital, Courage Boti. Courage, thanks so much for joining us on Business Live. First off, from your end and per your engagement with market players, what really has caused the recent pressure on the cedi, you would say?
Good afternoon. Good evening to you, Pius, and your listeners. Also, subsidy depreciation. I think speculation is playing a role. It's a big factor. What we see also from the perspective of the traders, a lot of demand from the corporate sector, largely the PTCs, And we are in quarter 2, and this seasonal trend, as we are used to in quarter 2, usually is that the corporates, multinational, do repatriate dividends. As to whether that is happening in real time now or not, I cannot confirm, but that is what we know over time. We know MTN has declared final dividend, so they will be in that process of repatriating unless there's an arrangement with the Bank of Ghana to prorate or stagger it. And a number of other institutions like that will do same as well. And of course, the auction we see, initially there were 2 auctions, 2 different types of auctions, FX auctions. There was that targeted the general market, and there was that was targeting the BDC. The BDCs has been slashed to just 40 million a month now, which is just a fraction of the needs of the BDCs for their oil and pulp. So a large part still have to be sourced from the local market. And then, of course, the one targeting general market has been cancelled altogether. So the pressures are here, but where are the sources of FX normally for the market? You will get those from direct and FDI inflows. You get that from portfolio investment inflows. You get that from remittances. You get from trade receipts and all that. What is happening on the portfolio side? The big source of FX for the last 2 or so years, our market is almost non-existent. So you are not seeing portfolio investment inflows. Are there as much direct investment inflows? Probably also not, because the climate is not very attractive. So all of these mean that the supply sources are mostly dry, and it appears Bank of Ghana is now a main source of supply on the market. Meanwhile, by regulation and by design, Bank of Ghana is supposed to intervene on the market only to smoothing volatility, because we operate a flexible regime where the market forces you into play to determine demand and supply, and by extension pricing. So I think it is the limited supply sources giving the dynamics of our market, and then on energy needs, the economy is recovering. So by extension, FX demand will grow, import demand will grow, and the pressure is building up. I think all these plus the usual election year gimmicks, where everybody knows how government behaves in election years, and those who want to take advantage of that are speculating now for their own personal gains in the future. All of these are playing a role, and I think this is what is underscoring the kind of trend we're seeing on the market.
Great. So talking about the Bank of Ghana and its approach so far, I don't know what you make of this whole intervention they are putting in place to support the cedi.
Well, what has the Bank of Ghana done so far? I think there is the intraday volatility smoothing, where on a particular day, they can see real time where the demand is coming from, where the supply is coming from. To the extent the demand is not frivolous, and by frivolous I mean that it is not some speculation, but there are real demand backed by appropriate documentation, and there is a supply deficit which could cause spike, they do intervene in different volumes depending on the need of the time to try to smoothing volatility on the market. We've seen them do that a few times already. We also saw, I think, a while back, where they kind of unified the currency denomination for CRR. It used to be that you keep CRR on dollar deposits or FX deposits in the foreign currency and cedi deposits in the cedi. Now it's been unified, and the intention was to free some dollars, which would have been kept at the Bank of Ghana at the time. They have to free it to the market now. That is another layer of intervention. And then the BDC's intervention. And you've seen them also adjust the CRR at this point in time. So those free cash that could have been otherwise available, and potentially part of it will find its way into FX accumulation as a speculative investment. Those monies are now locked up at the Bank of Ghana. So it limits what is available even in the system to allow for some of these activities. Those are the ways they have intervened so far. Is it enough? The evidence shows that the cedi is still under pressure, but would they do more? Yes, reserves are growing. They are better than they were last year. They were better than the crisis period. But are we at the level we are comfortable with here? Can the Bank of Ghana aggressively intervene on the market to try to stabilize the cedi? One, that is not their mandate. And two, they have to be careful how they do it, because they have clear targets under the program on what reserves to accumulate at what point. And so by that, I think they are doing what they can under the circumstances. And it appears it's not enough, but that is where we as a people, those who demand FS for speculative reasons, they are within their right to do so. But we need to come to the appreciation that the consequences of those individual interest-seeking behaviors have consequences for inflation, has consequences of price of goods and services, and general conditions of service living in the economy, which may far outweigh any return an FX investment may give us as a nation. And we need to be minded by that. People are within their right to do their investment the way they benefit, but the speculation has to stop. And it appears that general distrust of fiscal policy, fiscal authority means that we are sold out to the notion that in every election year there are excesses that lead to worse consequences. So let's protect ourselves now. But we are under program. The stakes are higher. The disciplinary requirement, it will take a super irresponsible government to do the things we usually do in the typical election years. I think I'm somehow comforted by the circumstances and how we can discipline government this year. But people haven't bought that yet. And I can understand why it's feeding into the speculation. But we need to get to that appreciation that the consequences far exceed the returns we could make from such speculative activities.
And Courage, I appreciate your insight. But how bad is the city's rate of depreciation against the dollar, maybe over the past 2 years against its peers in the region? And we understand that because of that, some companies are moving out of the region.
Well, every country has their own problems, right? Nigeria has their own fair share of currency depreciation problem. In fact, if we were doing what Nigeria was doing, maybe except that we didn't have the reserves to do it. But Nigeria has kept the naira artificially low for a long time against the wishes of the IMF and every other person that cares. And that created huge backlogs, multi-layered markets. Access was a problem and created a thriving parallel market. They have now decided to unify, and that unification led to the naira surging, in fact, depreciating sharply to over 1,000 plus per dollar, but now correcting a bit after they have now decided to sanitize the market and all that. So every country have their own peculiar issues. Egypt, same, they have their currency issues. You go to Kenya, probably a bit more stable, not a very good example, but every region have their own currency issues, right? So I ask myself, will every business relocate because there are currency problems, and are there ways around them? Well, strategy would tell you that if it fits into your strategy, you do so, because as a businessman, you are minded by your profit orientation and all that. Yes, there is problem in Ghana, but there are problems elsewhere also. Macro, fiscal, monetary, and all that. They are everywhere.
All right.
Some countries even have situations much worse than ours, really. So it's neither here nor there. It would have to depend on your business strategy, your profit orientation, and what you can tolerate.
Thank you very much. Research lead GCB Capital, Courage Boti, for your insight this evening. Now, a banking consultant, Dr. Atuahene, has warned that a takeover by Societe Generale by new buyers would have serious implications on the labor force of the bank. He stated that the new owners will undertake a restructuring that may see some layoffs to help the bank depart from old operations that affected its profitability. Now, his warning follows reports that the SGE has engaged investment bank Lazard to explore potential buyers for its subsidiaries as it plans to exit Ghana and other African countries. Speaking to Joy Business on the matter, Dr. Atuahene said such takeover come with strong measures that will definitely affect some staff.
Sorry to say, these international global banks or the multinationals, they have a tough research department who looks at a whole country, including your inflation, including your microeconomic, your physical stability, and even your energy sector. And for 14 years, for 10 solid years, 2014 up to today, we are battling with energy-related issues. Because if you buy a generator for a branch, and SG has said 30 branches, they need to provide 30 generators with additional diesel prices. And all these things make operational inefficiencies. So I am not surprised that they are trying to exit, especially in Ghana and the other African countries. And African countries, this must serve as a warning. Last year, if you remember, Stanchart sold businesses in Angola, Cameroon, Sierra Leone, Gambia. If we continue with the instability of the microeconomics of the economy, we're going to experience the multinational. And when the multinationals are leaving, they leave with something that some people don't know. They are a global bank. When it comes to syndication, SG was one of the teams that lead us. Barclays was a team, Stanchart. And if all these guys go out, a time will come when we want to go into international syndication. It will be very difficult unless you hire a consultant. It will be very difficult for you to get banks like SG to participate. So the ramification is a bit high. But a lot of people are looking at deposit. Fine. In our sphere, if they get somebody to buy, it's going to affect employment, as George said. You cannot have 2 managing directors. You cannot have 2 executive directors. All these people would have to be downsized. And that is where the right sizing and downsizing comes in. And that will have implication on the labor force.
And we've got to interrogate this further. Joining us in studio is my colleague George. You are fit to break it all down for us in terms of the shareholding of Societe Generale and, of course, its financials and operations. George, thanks so much for joining me in studio. First off, George, help me understand the shareholding structure of SG Bank Ghana.
And before I even get into that, we are looking at basically the current financial position of Societe Generale with respect to whether it is the economy, whether it's the banking sector, or even their operational module. So if you look at this from 1998, it was SSB, that is bank. Okay. I remember that there was some request for some investors to come in. SG Societe Generale came in 2003. They acquired 46%, that is a 7% shareholding in the bank. As time went on, there were requests for more of a right issue. SG went ahead to increase its holding in 2003 to 51%. Again, in 2004 as well, there was some, that is when they did the name change, actually from the SSB Bank. So you could see that the shareholding structure again increased to 52. And also when it came down to 2013 as well, there's a talk about the name change here, and also another right issue, increasing their holding to 56.7%. Coming down to 2009, you're looking at 60.22. Now, these are SSB is the biggest shareholder in the bank now. Okay. You could also talk about Social Security and National Insurance Trust having a little over 19% holding in this bank. And then you come down to the single individual shareholder, Daniel Ofori. So there's a bit of background in terms of the shareholding structure of the bank. So now let's look at the staff strength of the bank right now. We're looking at somewhere around 536 in terms of the trained banks here. Let's look at also the customer deposits as well. You're looking at somewhere about a little over 200 million Ghana cedis in terms of customer distribution. You're looking at somewhere around 205,000 retail banking, 204 corporate banking, 1,662. Let's look at that is the shareholding structure that I tried to explain earlier on. Yeah. So Societe Generale itself, you're looking at somewhere around that 60, Senate has that 19, and also come down to that single individual shareholder.
All right, so now tell me about the profitability of the bank over the past few months or quarters, I should say, and of course that of this current quarter.
I want to drill down to over there, let's say from 2022, 2021 as well, and let's look at some of the very interesting indicators here. When you look at the operating income as well, you're looking at somewhere around 802 million Ghana cedis. Now, if you look at the change, it's gone up by almost 32%. Operating expenses, yes, it was quite high, of course. Net to cost risk as well, you could see that is also there as well. Now, profit before tax. Now, in 2022, you know what happened. Now, SG, or Societe Generale, was one of the few banks in Ghana that actually posted profit because of the DEPP as compared to the other banks. So you could see a decline as well. If you fast forward to 2023, they've seen over 200% jump in profit before tax to 661 million Ghana cedis. So you could see the numbers here. If you do a comparison from 2021, you can see that it dropped in 2022. But if you fast forward to 2023, there has been some significant jump in its profit if you look at these indicators as a commercial bank.
All right, so when you talk about the loan books of the bank, how has the bank fared?
The bank has done very well in terms of growing the book. Now, compared again to other banks as well, you realize that these banks are so much exposed to government bonds. But when you look at Societe Generale Ghana, these are one of the few banks, again, that have grown their books organically. Even at a point in time, when you look at the Bank of Ghana average percentage rate, they had the lowest. And it looks like in terms of the internal mechanism, now, again, look at some of the things that you want to look at as in reviewing or assessing the health of a bank. Return on equity, over the years, it has shot up. Also look at capital adequacy ratio as well, the percentage that we are doing here. Now, again, if you look at the numbers from 2018, 2019 as well, you've seen how the numbers have grown in terms of capital adequacy ratio. One of the tools or mechanisms you use in assessing the health of the commercial bank. Return on equity as well, there has been a strong growth over the years as well. So all the indicators you want to look at when it comes to reviewing the health of the commercial banks, they are there. Maybe NPLs as well. If you look at the NPLs as well, they've also done quite well in trying to bring the loans that they fear that might go bad as well. The bank has also done very well in that area. So if you want to assess the bank based on how they have fared internally, and if you were a shareholder here in Ghana, and you're just restricting yourself to returns in Ghana cities, SG, or Societe Generale Ghana, it's a very profitable bank. It's a strong bank. It's a bank that has been able to deploy all the tools to actually grow. You're talking about the evolution of non-performing loans. Now let's look at the industry and even the bank itself. If you compare other banks, they are even doing far better when it comes to the non-performing loans or loans that they fear will not be paid back on time. Again, looks like they have certain strong mechanisms in place to actually get these loans back. Look at total deposits as well. And this was even in Q1 of 2023. As of now, they're doing over 5 billion Ghana cedis. So another mechanism that you want to use to assess a bank's health into the total deposits, they're also doing strong there. So this is not just even a year that you say that they just did well in a year. Again, look at net loans as well. If a bank is doing, we want to assess how much you're giving out in terms of loans as well. It is going up. If you also look at the evolution of corporate loans as well, evolution of retail loans as well, if you also look at corporate deposits as well, they are also very strong. So again, let the numbers do not lie, but maybe the big concern here is about, after all said and done, if you are repatriating this profit in dollars, that might be the biggest concern here, Pius.
And I'm wondering, George, it looks like Societe Generale really is performed, I don't know how to say it, tremendously well.
And have at the back of it, this is one of the few banks that have also limited their exposure to treasury bills. So they are not investing in government bonds, where some will say that they are doing what some will say real banking in deploying those organic tools to grow the bank and grow the loan book as well.
All right, so talking about their profitability and how well they've performed, so one wonders why then the parent company would say, well, I want to buy.
It is very difficult. Now, for most of these multinationals, it's not just one market. So a Ghana bank might be doing well, but compared to the cluster that it operates, that they might not be doing well, and therefore that decision to move out could look at that cluster as a whole. If you look at some of the regional banks, and if you compare to EcoBank Ghana, if you also look at other Nigerian banks, if you break down the returns, Ghana is the cash cow in the group when you look at even the profit that they made. Until recently, Nigeria came back strongly. If you look at first, EcoBank Ghana was doing so well. If you also look at the other Nigerian banks as well, in terms of the real indicators you want to look at. But again, it appears that the city's depreciation may be a major challenge here. But one would also say that it might be because a problem in the region is impacting badly on Ghana, and not necessarily because that individual bank is not doing well.
And we can't also overlook the fact that, well, some economic indicators, as you rightly mentioned, like the CD depreciation, may have
might be a factor. But in the midst of all these things, and I said that if you're a shareholder, if someone like Danofori wants to look at his returns in Ghana cities, the bank has been doing bad or has been doing good. But some will also say that it's not just about the depreciation of the currency. You want to look at the rate of depreciation over the years. If SG brought in about, let's say, $400 million when they came in, what is the value as we speak right now? And that might be the concern as well. Again, as I said, the cluster that the bank operates, are they doing well? Do you want to spend all the money on one bank or on the other banks in the region? So it appears that, yes, the economy might be a challenge, but also in what region is Ghana operating? That when the parent company looks at going forward, do we still want to look forward to this bank? Can we sell this bank to another player whilst we take the position of maybe just a shareholder? So if you look at the numbers, as I said, all the numbers shows that they are doing well. There's a bank that is growing organically, expanding organically. They're very strong in the area of SME funding as well, and even interest rates as well.
All right, so George, finally, tomorrow we know that the bank will be having their AGM. I know this certainly will come up, and I don't know how the bank intends to communicate that to their customers and what have you. But give us a fair idea of what to expect.
What we understand is that the bank is prepared to speak on this issue in terms of having a statement in place. Now, it appears that what can they, in terms of getting the group's blessing, as in what should be the communication in clarifying this whole thing. As we speak right now, Pius, we don't have any official communication from AG in Paris that whether the reports are true or not. All these things are based on report or speculation. So, well, let's see what happens. In a subtle way, they are trying to suppress this. But also, if they decide to go, maybe the first option might be given to SNIT, the next biggest shareholder in this bank, that do you want to buy the bank? Or you want us to give it to an outsider? So all these dynamics are at play here, Pius.
Interesting times ahead, George. Thank you so much, George, for that in-depth analysis here on Business Life. We appreciate your time with us. I am Pius Kojo Baka. Let's connect same time tomorrow. Bye-bye.